Good morning, everybody, and this is your Dow Jones day trade setup for today. So we have a 700 point rejection or 700 point wick on the candle, and if we get down to the daily, it starts getting even worse. So that is around 840 points, or 2.4% move in the market. So just starting on the daily, I think I'm just going to do this as well. That's what it is. So we have a megaphone formation. We're coming back to test a weekly trend line. You can see big down, big up. So that's kind of where we're bouncing off at the moment. We are creating newer highs, but we are selling off here. I've just added this level in now. It seems to be something we need to pay attention to. That's 34,390. And you can see there were people that jumped in on the break here by this tail. So there are people that are looking for it to be short here, but they've probably got a stop loss, 1,000-point stop loss, and that is not something I trade. So I don't believe we need to be looking at shorts just yet. Only once we start breaking below 33,454 do I start looking for shorts. So for me at the moment, this is, it's confusion, big up, big down. There's no two ways about that. But at the same time, there are obviously Fibonacci algorithms at play here because buyers stepped in right off here. And of course, they're not going to chase it up here. There's no value. They're going to wait for the pullback, and the pullback was quite deep. So that's kind of the one way of looking at this. The other way of looking at this is it is a rejection, and we're not going to get moving. So we're looking for something a lot better, or should I say, just do that. We're looking for a rejection. On the 3 hour, we've got a crossover now. Oscillators have eased off a bit, so that's off of the Fibonacci, 61.8 Fibonacci. So that is not giving me any confidence for anything at the moment, to be honest. Look at the hour, we've got a bit of a crossover, but it looks like a bit of a flag forming. So this is an area I would be paying attention to. And then I'd also be paying attention to the low of yesterday. A break below the low of yesterday and a rejection of that, we're moving back down here. And that's to 33,454. But at the moment, the trend is up, so you should be looking for opportunities to buy. But with this big move up and big move down yesterday, I have zero interest in getting involved in this. We've still got more noise coming out today with the Feds. So Feds come out with their interest rate hike. If it is as high as it has been, in other words, 0.75% or higher, you can expect a big move down. If it is 0.5, you're probably just going to range around you. If it's better than 0.5, or they're going to hold off, or they have noise about holding off in January and February, then you should see us visit the top of this trend line, or at least the previous high of yesterday. So that's kind of the view that we've got at the moment. Market is battling. It really is battling, and I'm going to pull this level down again just so we all on the same page here. This is a big double bottom setup, bottom neckline, and we are hovering around it, and we are battling to get above it. So this 34,315 is a key area to pay attention to. You're going to need to see us get above it, stay above it on the weekly before we have any hope of continuing to the upside. And it is trying. It is really trying hard. So, and if you look at this on the weekly, big move up, consolidation. Look at the previous move up here. Big move up, hanging man, confirmation bar, fell further in the channel, and that was off the trend line. This is different. We've got to move up the trend line. We've got a 1 week pullback onto the trend line to test it, and then we've got into this big range. It's a massive range. There's no two ways about that. It's a 1,000-point range at the moment. I think rather look at it in percentage-wise moves. It's a 2.8% move in the market that we are up 2.8%, down 2.8%, up 2.8%. So extremely volatile still. I can go either way, to be honest, but I'm still favoring the upside. As long as we are above the moving averages here on the weekly, I'm favoring the upside. So For me, it's a sit and wait. I don't fancy getting myself burnt here with noise. And when you're trying to trade against algorithms, they've got much deeper pockets than what we do, and they can execute trades far quicker than humans can. So for me, I'm not interested in this. I really am not interested in this. We'll wait for the Fed to come out before we start looking for anything. Yeah, but the trend is up, so ultimately we should be looking for a move to the upside. And you can see, yesterday was kind of difficult. Trend was up, massive move up. You're always looking for a pullback. There's no structure that we've created for the pullback to sustain itself, and it just comes all the way comes past the first bit of structure, and all the way down to this level, in between the moving averages, ranges, and now we're back up again. So with oscillators group the upside. So it wouldn't surprise me. Move back down, and we just hover between 34,300 and 3450, just to hover in between that until the Feds come out this evening. And once that's out the way, we should have some relatively plain sailing, although we do have options close out on Friday as well. So I don't know what the what the Dow Jones open interest is, but I do know that the S&P open interest is pretty much around the 4,000 level, which is where we are hovering at the moment. So yeah, there's a lot of things to worry about today, but I think for me, stick to something that's easier to trade, and by the looks of things, we have some continuation on Forex, so that's probably the area that I would focus on today rather than the indexes. Anyway, hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.